Form 8863, Education Credits. So we've previously done a video on this tax form, but it's been a couple years, so wanted to take the opportunity to update it. There's not really a whole lot of new information that's impacted either the American Opportunity or the Lifetime Learning Credits. So we're just going to walk through this form, just point out what you should pay attention to. As a general rule, an American Opportunity Tax Credit is at least a partially refundable tax credit, and whereas the Lifetime Learning Credit is a completely non-refundable tax credit. So before we get into this form, we'll take a moment to kind of talk about some of those terms. First, the difference between a non-refundable and a refundable tax credit. So a non-refundable tax credit is exactly what you would expect from a tax credit. It reduces your tax bill down to zero, or if possible. So if you had a $2,000 tax bill and you had a $2,000 tax credit, it would reduce your tax bill down to zero. But if you had a $2,000 tax bill and a $2,500 tax credit, then it would still reduce your tax bill down to zero, but it wouldn't create a negative number. So it won't generate a refund for you. What you do with that extra $500 of a credit depends on the nature of the credit. Some credits you can roll over to a future tax year, some you cannot. The opposite type of credit, a refundable tax credit, means that in certain circumstances, if your tax bill goes down to zero, then a refundable tax credit could generate a year or a refund for you, even in a tax year where you didn't have a tax liability. So probably the biggest recent example of that would be the COVID stimulus payments, where a lot of people were eligible for those COVID stimulus payments, even if they didn't have a tax bill, even if they weren't even required to file a tax return, they could still request those COVID stimulus checks and get a check from the government. So I mention this because refundable tax credits, such as the refundable portion of the American Opportunity Credit, are highly subject to abuse and fraud, and the IRS pays very close attention to people trying to claim a refundable tax credit. So there can be penalties for fraudulent claims of a tax credit, specifically education credits. And there are certain circumstances where the IRS will reserve the right, if they suspect fraud in a certain instance, they reserve the right to not only disallow the tax credit in the current year, but for future tax years. Even if you otherwise qualify at a later time, you may still be barred from taking a certain credit in that year. So definitely be careful that you're applying for the correct tax credit, and that you are entitled, that you meet the entitlement requirements for that applicable tax credit. And we'll put links in the show notes to resources that we've created about particular forms and schedules that are related to this topic. And we'll also put in the footnotes links to in-depth videos that we've created about both the American Opportunity Credit and the Lifetime Learning Credit. So the American Opportunity Credit generally is for the first 4 years of college. So that matches with a person traditionally leaving high school, going to 4 years of college. They would have, under most circumstances, the opportunity to participate and take the credit for each year that they're enrolled in college. And then the Lifetime Learning Credit would be something that can be applied for future tax years once that person is no longer eligible for the American Opportunity Credit. And again, you have to account for any scholarships, any grants, any other things that may have offset the cost of your education, So there's a bit of coordination that's involved in making sure that you claim the opportunity credit for out-of-pocket expenses after things like scholarships, grants, and things of that nature. So again, we've created videos that go into depth about the American Opportunity Credit and the Lifetime Learning Credit, and we'll put links to those in the show notes. So let's go ahead and start completing this form. There are 3 parts to this form, and we'll go over them as soon as I complete John Doe's information at the very top. So part 1 is the refundable portion of the American Opportunity Credit. So as I mentioned earlier, it's partially refundable, but it's not completely. So 40% of the American Opportunity Credit is refundable. The other 60% is calculated as a non-refundable credit in part 2. And then in part 3, it's going to be information about the student and the educational institution for which you're claiming either tax credit. And you would complete a separate part 3 for each student. So for example, I have twins that are going to be going into college next year. When I get to the point that I would claim a tax credit, I would complete one part 3 for twin A, and then I would complete another part 3 for twin B. So just keep that in mind as you're going through this. So let's go ahead and just start at the top. So we're going to complete part 3 for each student before we get to part 1. So we immediately go to part 3. And for sake of argument, we'll just say that we have one kid that we are worried about. So John Doe is going to be claiming this tax credit on behalf of his daughter Elizabeth. So, and then Elizabeth's social security number. So let's just say that she went to Acme Community College. If she went to a second school, then you would put the second school. We don't need to do that. You should expect to receive a tax form called Form 1098-T from each college that you had qualified tuition expenses. So this would be qualified tuition expenses and so on and so forth. So we're going to complete this in just a moment. So the first question is, did the student receive a tuition statement? That's IRS Form 1098-T from the college. So that will say yes. Now, did the student receive Form 1098-T with box 7 checked? So when you look at box 7, what that means is if it's checked, then the box 1 amount, which is the total amount of payments that the institution received for qualified tuition and related expenses, that amount also includes any amounts for an academic period beginning January through March of the following year. So for example, this is the 2025 form. This would be the form that you would use for the 2025 tax return. If box 7 is checked, then that means the total tuition amount also includes prepaid tuition costs for the January through March 2026 timeframe. And then you would enter the EIN if you're claiming the American Opportunity Credit, or if you check yes in box 2 or 3. So let's just say that it did not include box 7 being checked. So we're going to put the EIN for Acme Community College. So the rest of this information is for the students. So if you've claimed the American Opportunity Credit for the student, you would check yes. You would stop and go to line 31, we're only talking about the lifetime learning credit. Okay, so the rest of these have to do with the American Opportunity Credit. So if you hit yes for this, then you would stop. Now you're claiming the lifetime learning credit. So let's just say no, we're still eligible for the American Opportunity Credit. Line 24 talks about the enrollment requirement. So the enrollment requirement is the student has to be enrolled at least half-time for at least one academic period during that year, or the college has to have treated them as having begun a program towards a degree, certificate, or other credential. So basically, you had to have done some work, a minimal amount, however that college defines half-time credit. You can't just take one course and say, I'm good, I'm going to claim the tax credit. You have to meet the education institution's definition of half-time credit. Did the student complete the first 4 years of post-secondary education? So if yes, then you can't take the American Opportunity Credit because it's only for the first 4 years. So we're going to say no. We're going to go to the next one. And then the final thing, and again, this is an outlier, but it is a legitimate tax question. Has the student ever been convicted before the end of the year of a felony for either possession or distribution of a controlled substance? So if you have a felony drug conviction, you cannot take the American Opportunity Tax Credit. That's part of federal law, and there's really no way around it. So we're going to say this student is good. We can claim the American Opportunity Tax Credit. So now we're going to fill in this section. You can either fill in this section or you can fill in this section for one student. Generally, you're not going to be able to claim both in the same year for the same credits. So adjusted qualified education expenses. We have the exact definition in our article, which you can check out on teachmepersonalfinance.com. But to summarize it, this would be qualified education expenses that weren't otherwise offset by scholarships, grants, tax-free money of any sort, so on and so forth. And if you're taking a tax-free withdrawal from a 529 plan, you can't double dip. So the 529 plan, let's just say you paid 10 grand of expenses using the tax-free money from your 529 plan. You would have to figure out other expenses other than that 10 grand. So if let's just say that you had $15,000 of expenses, $10,000 came out of the 529 plan, you've got $5,000 worth of qualified expenses that you can report here. We're going to enter $4,000 because that's literally what the instructions tell us to say, to enter. Do not put a number more than $4,000. So now we're going to subtract $2,000 from line 27, and that's $2,000. We're going to multiply line 28 by 25%. So that would be $500. Now if the line 28 amount is 0, we would enter the amount from line 27. Otherwise, we're going to add $2,500 to this number that we just put here. And we're going to enter the result. Again, for the student, we're going to skip line 31 because you can only claim one or the other, but not both tax credits in the same year. So this would be 0. Now, if we had multiple students, we would be adding all of these up. And then we're going to put we're going to start off part 1, line 1 with this number right here. So if we add this 4 times, we would go up to part 1, line 1, and we would enter $10,000. As it stands, we're putting $2,500 in. Now we're going to go through the part 1 calculation to tell us how much of this American Opportunity Credit is refundable. The rest of it will go down to the non-refundable portion. So a maximum amount of 40% is going to be whatever we can claim the refundable amount. So first, we have to take the modified adjusted gross income. There's a ceiling to that, so let's put $180,000 because John Doe is a happily married person, and his wife Jane Doe is, they're filing a joint tax return. So you're going to put the amount from your Form 1040, line 11B, which basically constitutes your adjusted gross income. But you're going to have to make certain adjustments if you're filing IRS Form 2555, which is the foreign earned income box or form. This form 4563 is for certain residents of American Samoa, or if you're excluding income from Puerto Rico, then you can follow detailed guidance in our article or IRS publication 970 for the amount to enter. So let's just say that their income was $100,000. So in this case, $80,000, we've got that left over. If for some reason this was $200,000, then we would be phased out of the credit because we would be zeroed out. So we can't take it if your income is above this amount. But John Doe only made $180,000 last year, or $100,000 last year, so he's got $80,000 left. Now we're going to kind of go through and see if there's a phase out. Some credits are partially phased out at a certain income level. So we're going to put $20,000 for this lovely married couple. And now if line 4 is more than or equal to or more than line 5, we're going to put 1.0. And so now we follow the instructions. Multiply line 1 by line 6. That gives us $2,500. If line 4 was less than line 5, you would divide line 4 by line 5, and you would put something different. So we're going to finish this up, and then we're going to change the numbers and run that scenario. So multiply line 1 by line 6. We've got $2,500 here. You would, if you were under 24 and you meet the conditions described in the instructions, you can't take the refundable portion of the credit. You would take this amount and take it as a non-refundable credit. You would check this box. We're not checking the box because we can still take a refundable portion. So we'll multiply line 7 by 40%. That gives us $1,000. That's the refundable portion. We're going to put the line 29 amount, or this amount on line 29 of the Form 1040. That is the refundable American Opportunity Credit. That's calculated as a completely different tax credit than the non-refundable credits, because that's a credit that can reduce your tax bill below zero and generate a refund in a year that you might not owe an income tax. Before we go to part 2, let's change this up a little bit. Let's just say that this amount right here was $10,000, and now line 4 is less than line 5. We're going to divide this by line 5, and we get 0.5. So now we're going to multiply line 1 by line 6, and we get $1,250. And now we're going to multiply that amount by 40%, and that gives us $500. Okay, so that would be the refundable portion. And then we go on further. So that would be, so this scenario, that would happen if our income up here was $170,000. So as you can see, there's a phase out. $180,000 is the end of the phase out. But if you kind of work backwards from the math, $160,000 would be the beginning of the phase out. So between that $160,000 and $180,000, there's going to be a phase out where you have to do this math and you're going to be eligible for a smaller credit. If you're below the phase out, then you're eligible for the full $2,500 credit. Let's go back to the previous example and just kind of walk through this. So we've got $1,000 that we took as a refundable portion. We're going to subtract that from the $2,500, and that means that $1,500 is our non-refundable credit. So after completing part 3 for each student, we're going to enter the total of all amounts from part 3, line 31. So we're going to add any of these right here, up here. Again, so since we took all of the part 3's line 30 and we generated a number here, we're now going to add in all the lifetime learning credits that we generated for each student. So now we have a 0, which means we can skip all of this because we went through it in part 1, and we would enter 0 on line 18, and then we would go to line 19 and we would enter this line 7 amount. Okay. Actually, there is line 18 says multiply line 12, which is, so we would have to, let me just double check. Skip lines 11 through 17, enter 0 on line 18. So there's none of this. And then we would go to line 19, but we would carry this figure down and we would enter that here. I believe that's what the instructions actually say. If we had to go through the credit limit worksheet, which we do have extra instructions for in the article, then we would use that information to do the income calculation here. So let's go back and just say that this $1,500 was actually from the lifetime learning credit. So now we're going to enter the smaller of line 10, or $10,000. And we're going to multiply this amount by 20%, so that's $300. We're going to enter the income, the $180,000 up here. We're going to do the same thing that we did up here. So we've already addressed the issue of a phase out. Let's just say that we kind of walk through the same numbers that we did up above. And we've got $80,000 left over. So you would do this. So it's very similar to calculating the phase out. If line 15 is more than line 16, this is going to have a 1.0. And then multiply line 12 by line 17. Then there's the credit limit worksheet. So I will let me see if I can pull up that information. And if I can pull that up, I will bring that up onto the screen. But if not, actually, I don't think I can operate that right now. So I'm going to put a link to a video where we go through that step by step. And there is a video specifically on the credit limit worksheet. It's going to look like this. This is from the form instructions. And we're going to have the credit limit worksheet available right here. So this is where you would enter various amounts from different non-refundable credits, and we're going to take whatever is available, assuming that our tax liability works down to 0. Certain credits would be counted, certain credits would be not counted. And so that's the credit limit worksheet. calculation to determine what goes in here. If there is no credit limit worksheet restriction, then you would simply report the credit from the credit limit worksheet. So that's how that works. And generally, your tax software is going to automate all this. So all you should see is the number here, and that's also going to populate onto Schedule 3, Line 3, and then that will eventually trickle down into the non-refundable tax credits portion of your tax return, your Form 1040. So that covers the three parts of IRS Form 8863. Again, we'll put links in the show notes to other resources about some of the forms that were mentioned here, but also things like more in-depth video on the American Opportunity Credit, the Lifetime Learning Credit, the credit limit worksheets, and other topics that we didn't cover in this video. So if you want the step-by-step instructions, you can go to our website, teachmepersonalfinance.com, type in IRS Form 8863, and our recently revised article should pop right up. It should also include links to videos where you can watch, drill down into those specific topics. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And as always, if you have any questions or comments, or if there's another topic that you'd like to see in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.